Yeah, I'm losing my edge.
Pete, today we're going to talk about non-farm payrolls. It is Thursday afternoon, not a time when people typically talk about non-farm. But hey, here's the thing. It's at 7:30 a.m. And if you thought that you were going to get up in the morning and cram before the exam at 7:30 a.m., you probably aren't going to do it. That's how I lived most of my college life. Oh, it's 8 or 9 p.m. Should I have a beer or should I do the 2 hours of studying for my Friday exam? Nope. I always had the beer and told myself I'll get up at 5 a.m. I'll do the studying. You're not going to do it. I never did it. So let's talk about non-farm payrolls today, Pete. This is something, how many, I'm going to give you actually an over-under for the amount of non-farm payrolls you have witnessed and traded in your life. There's 12 per year.
Wow.
You've been around many years in your life. And I would say that you probably traded 400 over under 400.
Yeah, over under 400. It's funny you mentioned that, though, Frank, because this was not something that was 20 years ago was looked at. What the big mover was, and we would rip 200 points in currencies, was the trade balance. Now, the trade balance comes out once a month, and it talks about, there's a trade balance has a goods trade balance and everything. If you have a goods trade balance, like our country does, which means we import more than we export, we have a capital surplus. They're equal in amounts. So whatever the case of what that means, but that's a number that I don't think anybody even looks at. And I don't think, it's funny because I see it on a calendar and it's like, I almost get reminiscent of, because I remember everybody would wind up and the market would go 200 points on that, where unemployment would be like, it's just, it doesn't really mean anything. It's a backward. It's funny how these, and I think that speaks to, in the long run, what do any of these mean? They're very much things that come in and out of vogue, and people will build a story about. I think you could really argue the relevance of you and I coming from that side, even 10 years ago. This is something we were glued to and set up for on Tuesday before the Friday. We started to build strategies. Now we're talking Thursday at 12:45, and it's like, it's more an annoyance than an opportunity right now.
Well, because it's funny, and I'll define the thing for anybody who doesn't know it or hasn't really witnessed it. So the first Friday of every month, the government posts some numbers, and non-farm payrolls. It seems like a weird term, but it's actually pretty straightforward. It's the amount of job turnover aside from farming employment there, and they give you a bunch of these statistics, but usually the headline number is the plus or minus. That's usually 10 to hundreds of thousands of jobs that were either picked up or lost in the last month there. Right. And it's backward looking, like Pete said, and it has non-farm in the name of it. And I'm no disrespect to anybody who has farmland. It's especially for right now, it's got to be a great investment to be living on a farm, all that space and everything. But in 2020, non-farm payrolls, it's all the jobs that aren't on a farm. The term itself seems a little bit antiquated. And like you said, I started professionally trading in 2015, and every year, almost every month that we went to trade non-farm payrolls, it did almost solicit less and less movement, less and less interest. And I'm sure by 2030, we'll be looking at, every Thursday afternoon, they'll come out with the robot count, right. How many robots are working in the United States, and that'll be the next thing.
Right. There'll be some sort of lithium indicator, because that'll speak to the amount of batteries that are being made for whatever part of cars.
Oh, your thing was smarter than mine. Mine was stupid. I just said robots, and you're talking about lithium. Wow.
Well, I'm just saying, it will be something that's much more relevant, and again, useless in the long run of trying to predict some sort of economic activity.
But let's make some use out of this, though, because
it exists. So let's take advantage of it. Absolutely.
Yeah. Yesterday, we'll milk it for all it's worth. There you go. There's your farm reference, all you farmers out there. But
the reason it says non-farm is farm employment is seasonal, so it tries to remove some of the seasonality from it. So quit picking on the name.
I'm
hey, And there is, guys, I have delivered your useless fact for today. You can
I was
check
going to
that,
say,
you can check that box.
if you went another 60 seconds, I might have fallen asleep there. But yeah, because yesterday we talked a lot about month-end capital flows, and in my mind, these are pretty similar. At the end of every month, Pete, this is something that you have definitely kind of cornered here on the network. Your one of your favorite trades, the month-end flows. It just means at the end of the month, specific to metals markets and equities and currencies, when their traditional pit close was in the olden days, that's when you see a lot of random movement because people are offloading positions going into the next month. And you saw this, the metals traditional pit close there is 12:30 p.m. And you saw right at 12:30 p.m. huge slam down. And you and I were looking at buying SPRE, gold and silver, just a little bit lower. We missed it. You saw the bounce. And then, we didn't want to get back into this trade here because the event was over. And I don't want to go too deep on that. I just want to kind of say that this is what we're looking at with non-farm. Very short-term,
very good analogy, right?
Opportunity here, where if you don't get it in tomorrow, the number is at 7:30 Central Time, 7:30 in the morning. If you don't get a trade on between 7 and 8, I would almost then say, all right, the next thing I'm looking for is the stock market open at 8:30, and I'm not non-farm payrolls is almost out of my mind here. And so this is what we're looking at, right? Like a little short-term burst in one direction or the other. And then you and I, our strategy is usually just to get on the other side of it because, like you said, no one actually cares what the non-farm payrolls number is, right? Like it's
Absolutely.
This little data point that tells a broad story, but in the moment, tomorrow at 7:30 a.m., I'm just looking for a random big move that I can get on the other side of.
Yeah, these are truly, and like the month-end trades, they're when I use the term non-denominational, I really don't care. I don't have an opinion on that. I like buying silver because it's at this level. All I liked and what we tried to do, and we were a little too greedy, was I like the fact that there are random flows that these guys are compelled to do irrespective of what the price level is. They just get a rebalance. So you know what? They're compelled to do it at a time. We know some certainty around that time. Then we look for it. Sometimes it works. Sometimes it doesn't. Sometimes they get there. Sometimes it doesn't. This is, you're right. It's a non-denominational, unemotional trade. You look for the ranges. Your location around these scalps have no reference around a directional assumption or strategy. And you've got pretty clear mechanics that you're either going to make or lose relatively quickly and move on.
Yeah, absolutely. And so let's move on to tomorrow's number and what we've historically seen on non-farm payrolls out of all these different asset classes. And we're looking at SPRE, STIX, SFX, and SM75. And this really runs the course of most of the asset classes that we like to look at here. We've got equities, metals, and currencies soon adding that yield piece that we're going to speak to in a second here. But Pete, this is kind of tiered. The interest here is usually tiered, right? Where non-farm payrolls, the instantaneous reaction is usually in that interest rate market, right, which will be coming on board at the smalls very soon, hopefully for the next non-farm payrolls. But then it's almost like, what's the next in your mind? Is it currencies or is it stocks? Is the next place that you look on a non-farm payroll Friday?
I think it recently is. It used to be currencies would have the longest move and kind of hang on to it. I think that it is, as you said, interest rates, and then it's equities. And a distant laggard is the dollar, and metals are. You'll see a little jump in metals. It's just the guys who do more complex arbitrage strategies tie that in as part of a hedge. That's such a muted little move. There's never anything to look at. So you're absolutely right. It's rates, it's the equity indexes behind it. And then, it used to be, there was a really interesting dollar part to that play. Not because our unemployment has anything to do with the dollar. It was just what was of interest that kind of evolves. But I don't know what do you feel?
No, I would
Run
agree
through
with
this
you
exercise.
there. And thankfully, you're a big part of the show, Pete, is both your personality. You're very handsome as well, but your experience. And I'm glad
I
that
am
you
not
kind of
Venmoing you money after the show.
you tipped your hand a little bit to what you expect out of these markets. And I'm more here to crunch some numbers. And we've been crunching a lot of numbers recently to show that you only need a slight edge with these smalls products, low fees, low margins, that don't require you to have a success rate of 55% or anything like that. So let's see if we do have some slight edge in these markets. What I did was I looked at the non-farm payrolls here in 2020, and I looked at, on those days, how much did the small stocks move? How much did small technology move? How much did our dollar product and metals move on those days? And I wanted to see if there was outsized movement on those days. Okay, well then we can prepare for that and maybe widen out what we're looking at 7:30 a.m. If there was the same movement, then we can have the same gauge. And if we see one of these big wonky moves, then we can kind of call BS on that and try to call its bluff and get on the other side. If there's less movement, like you maybe alluded to, could be seen in metals, then if we saw a normal day tomorrow, then I'm kind of ready to get on the other side of that. In stocks, you actually saw on non-farm payrolls this year, here in 2020, I believe, what we must have had 9 of them because we're in the 10th month here. We saw stocks actually close within their normal range. There was no expanded range close to close in the stock market on non-farm payroll Friday. So what that means to me, and we've designed these small exchange products in a way that a normal range on a daily basis is usually around $1. We love to talk about this dollar. So small stocks at about $50, Pete. If the normal range is around $1, if I see tomorrow at 7:30, 8 a.m., anytime around that non-farm, if I see a violent move to 51 or 49, I'm ready to take action because we've seen historically on these non-farm days that SM75 is not closing outside of that range more often than it does on any normal day. And so that's what I'm looking for. Of course, you can get burned, but that's the slight edge that we're talking about here is the fact that, we're not seeing them close outside of that range 55, 60% of the time. I actually saw them close within that range more often than not. So that's the edge here in stocks.
Yeah, absolutely. And I think, and you know what, just to give a sense, and I'm not backtracking on where is the greatest initial move was kind of what I was focusing on. I think this is really what's important though, is you added context of, which is critical, is okay, what has the biggest move? But okay, so that's the strategy. This is where the interest is in terms of the movement. That's the first part of the strategy. The real strategy is what are those levels I should be interested in? And then statistically, what does it tend to do? There you've just built strategy, thought through strategy and then mechanics, which is great. So
absolutely, because the thing that you were right, the thing that does move, and we'll have these S10Y futures soon, the thing that did move outside of its range is the Treasury yield, and that's at first tier mover. And we'd expect this because unemployment and these revised numbers on unemployment from previous months that will come out tomorrow morning do affect the long-term plan for the Fed and interest rates here in the U.S. And so there are some fundamental changes coming off this number. And while you'd say, oh, if it's the first tier mover, I want these S10Y futures tomorrow for the non-farm payrolls. I almost like looking at the stock market, kind of like I think you were about to go here, Pete. I like looking at the stock market more because it's easier for me to call BS on it. Tomorrow, I hope more than anything, we see $1.25 higher or lower in SM75. And what we've normally seen, which was confirmed by the data, is that wiggle around the number and then a very normal settlement. I don't want, Pete, yields that move maybe 50, 60 cents on an average day. And then on non-farm, they move up $1.25 like stocks. And then they just sit there because stuff is fundamentally changed. That's not a short-term opportunity for us.
No, and you're absolutely right. And it's that sitting part that is the problematic part because you're then left with and honestly, that speaks to, I think this is great because you almost scratch this off your to-do list for this particular binary event, because the proclivity is that very rarely does it give you time to manage trading that extreme.
Absolutely.
And usually if you do, and I think we both could speak from this experience, sometimes we get something on an extreme, but unless we're willing to take what I think we'd argue is an unreasonably small amount of profit, we're going to be sitting on something that is just going to just be uncomfortable and annoying to look at for the balance of the day, running us right up to Losers Club at 12 o'clock.
Yeah, and we do not want to be in Losers Club. And a couple other markets here that would hopefully keep us away from Losers Club are these third-tier movers in currencies and metals. And we saw in SFX here and SPRE very similar stories. They actually closed well within their normal range on non-farm. So if I see a big move in metals tomorrow off of this 7:30 a.m. number, I am absolutely trading on the other side of it. And same with SFX here. If I see a move in SFX up or down $1 at 7:30, 7:31, 7:32 a.m., I have the historical backing telling me that this is not usually an abnormal day for currencies. It's not usually an abnormal day for metals. And so I'm fine with trading non-farm payrolls, the second and third tier movers, equities, and then third tier, the currencies and metals, the other side of anything that looks abnormal, because on non-farm, they've been as normal as they can be.